Good morning, it's Scott Redler, Chief Strategic Officer at T3Live.com, and I'm here to give you Friday's morning call, the first Friday of the new year. So we're all expecting the jobs number to come out. It came out. All the numbers were really good across the board, and it definitely steps in the right direction. And obviously, we have a lot more to do in order to get this economy back on track. Lately, the U.S. numbers have definitely been better, or at least a little bit more positive. You know, what it's trying to counteract is this euro that's just falling apart. Euro's been at lows every day, and we've been somewhat ignoring it. So it's positive that we're decoupling from that. Maybe they want to devalue the euro. So this way, the problem with those sovereign nations is, just like Greece, so to speak. Back in the day, they would just devalue their currency. Everyone would go there, and it'd be very cheap, to buy their goods, to vacation. It would stimulate their economy. So with a strong euro, that wasn't taking place. So who knows? Maybe the euro going lower, we can continue to ignore it because our market has found dip buyers every day. So the past 2 days we've been opening lower, and dip buyers have been coming in to support that 200-day. Question is, can we trade higher? Can we break out of this range? So if you look here at the spiders, you will see that the past few days we've had some nice methodical trades off those lows. You've had a nice little area to buy, like right around that 126.50 that has been pretty methodical. As you can see on a more macro level, you have your low from October. You guys remember right around here I said I put a 75% chance that's the low of the year. Then you had your low in November, then you had the low in December, and then now we're trying to clear this area, this downtrend, which we did earlier or a week ago or so. And at this particular point, we're not exploding right now, so it'll be interesting to see what happens here. We might need more time, but if they sell this market off, I do say it will be a bit discouraging. So let's hope that the euro doesn't give us too much pressure, because if you look here at the euro, you will see it's just under pressure. And yesterday it went to the dead lows. So our market's been holding in there while the euro has been collapsing, and now today the euro is down again. So, who knows where that stop's going to be. So the lower it goes, I guess the more panic it gets in there for now. So we shall see. As far as stocks, though, I've seen a lot of really good setups. Across the board, we've had nice action since that December 20th gap and go. There's been trades, setups, leadership, laggards coming back up. So pick and choose your battles. A few of them, obviously, Apple's been unbelievable for us. This is where I started to try and buy my swing position right around here. Then you had that gap fill, which has been good. And now it's coming up to 420. I would say if you want to sell some against this high here for a bit of a rest, that's fine. But if you're a macro investor, you could also stay the course. Google was downgraded yesterday, took the day off. I'd like to buy this thing somewhere around this gap, around 648, 650. I'm not quite ready yet. We did have our buy price around 636. Nice move, so it'll be interesting to see, where we could buy that dip. So I was writing that around at 650. So if you try and maneuver this, you will have saved yourself about 20 points. As far as some setups that look good, OAHs I think look good. They've been holding in there. They haven't been leading, but if you look here, you have a nice little flag type formation. I've been in tier 1 since this area. You know this inverted head and shoulders pattern we've been talking about. At this point, it does seem like if it can clear 119.50, you could then get to 122. XLE actually looks a little bit better than the OAHs. They've already started to really perk up. This is a nice looking macro pattern here. I'd love to see it stay above this descending channel. You have stocks like XOM that look good, hovering near the highs. You have Chevron looking good, hovering near the highs. And then even yesterday, with those poor retail numbers, a lot of those stocks traded off the lows, which was, a bit, a bit positive, that they didn't open lower and get crushed. So there were some dip buyers in some of those stocks like Target that's been beat up. Even JCPenney's came off the low. And then you have some stronger ones like a Nike that looks pretty good, right? You look at Nike here, looks like it's trying to break out. If this can get above 98.50, it should be able to extend. I like the pattern here on Coach. Coach has got a nice tight downtrend to start to break above if it could do it. So this is a nice pivot if you're in tier 1. Here's your ad. We talked about HOG yesterday, HOG. This is a nice tight pattern. You have your resistance right around this, 40. If you can get above 40, there you go. As far as the banks led the charge yesterday. Bank of America was strong. JP Morgan we've been holding on to, for almost a week. It's been on the virtual trade floor. If you look here, you'll see nice pattern, but a bit extended. It could use a little bit of a rest. So if you're holding it, I think you could stay the course. Goldman was downgraded today. It's been a lot weaker. let's see if it could hold in here. I have some. I'm going to use this 92.50 as my stop. If it breaks below 92.50, I'm out. But if it absorbs that downgrade, maybe it'll breed some confidence for it to take out this 96.5 area. As far as the little guy that you guys keep, you asked me about yesterday, this hop. There's some talk from some sales traders that it's going to be at the trade show, the CES. The last few times it got frisky when volume came in. This was 450, did it again, and this, it could be in the Apple TV, which the Apple TV is supposed to, actually get some traction. So, for those of you asking me about it on the virtual floor, that's why I'm involved. So right around here, I think there's room to about 140, 150 before it gets some resistance. If you look yesterday, you will see that some decent volume came in. A decent volume came in. Let me get it over here for you. Actually, just something to this, you can't see it, but we'll get to that anyway. And as far as gold, you guys were asking me about gold. Gold, decoupled a little bit from the FXC. I do think this is resistance. It's 158, 159. If you played it for this nice oversold bounce, congratulations. If you're looking to reshort it, this area will be an interesting spot. So all in all, there's been action across the board. If you're just trading intraday, there's been some setups. If you've been trying to hold multiple positions, like I've been doing on the virtual trade floor, the market's been making me money besides making the cash flow. For the active investor, there's been outperformance if you've tried to maneuver your account. So all in all, it's been a great 2 to 3 week methodical trade. Today, it'll be interesting to see what happens. The numbers were good. It would be a little upsetting if they sell the numbers. If they do sell the numbers, make sure to watch 1260 to 1265. That's the area that's been holding. And it's been a long week. So if you started off on the right foot this week, congratulations. If you didn't, try and reevaluate over the weekend, and let's make sure that we get going in January in the right way, because there has been action. Follow us on the trade floor if you don't, and also tune into the recap, and we'll tell you what worked throughout the course of the day. It's been Scott Redler, T3 Live, the morning call. We'll see you at the recap.